The Federal Reserve is entering one of its most politically fraught moments in decades. At the center are two interlocking high-stake developments. First, President Donald Trump's push to fire Fed Governor Lisa Cook, and second, the accelerated confirmation of his economic advisor Stephen Miran to a vacant seat on the Fed's Board of Governors. What makes these moves critical is that they are happening right before a scheduled monetary policy meeting on September 16-17. At a time when the Fed is expected to cut interest rates slightly amid concerns about inflation, labor market softness, and economic growth. The timing, the identities, and the legal challenges involved all spotlight a tension between political influence and central bank independence. Lisa Cook, a governor of the Fed since 2022, confirmed under the Biden administration, was removed by Trump on August 25, citing allegations of mortgage fraud connected to property claims that she made in 2021, before she joined the board. Cook denied the allegations shortly after she filed a lawsuit challenging her removal, arguing that the law governing the Fed allows removal only for cause misconduct or failure to properly perform duties while in office, and that the actions that precede her appointments do not meet that standard. On September 9, Judge Julia Kopp issued a preliminary injunction blocking Cook's removal while the litigation proceeds. The judge ruled that there is a substantial likelihood Cook will succeed on the merits, particularly because the alleged conduct occurred before she held office and does not appear to meet the legal threshold for removal under the for-cause standard. This decision means Cook remains on the Fed board for now, including during the upcoming policy meeting. Parallel to that, the Senate is fact-tracking confirmation of Stephen Miran, Trump's nominee to fill the seat vacated by Governor Adriana Kugler. Miran currently serves as the White House's chair of the Council of Economic Advisers. If confirmed, he will join the Fed board just in time for its policy meeting. His confirmation is controversial, largely because he has expressed views in the past that suggest he supports a closer to or less independent relationship between the White House and the Fed. One particularly delicate issue is that Miran intends to take an unpaid leave from his White House job rather than resigning. If confirmed, critics argue that dual affiliation, even if partially suspended, poses a conflict of interest, because the Fed is meant to operate independently of executive influence. There are concerns that Miran's residence is both roles could blur lines of accountability and policy direction. Supporters argue that unpaid leave is sufficient and that Miran has pledged to act based on economic data. Nevertheless, for many analysts, the optics and legal framework matter. All this unfolds just ahead of a Fed meeting during which a rate cut is widely expected. Most analysts and market participants anticipate a 25 basis point reduction in the federal funds rate, from around 4.25% to 4.50% toward 4% to 4.25%. The question is not just about whether to cut, but how aggressively and in whose voice the decision is being made. With Cook's status uncertain until court rulings are finalized, and Miran possibly joining the board, the composition of voters for this meeting may shift in favor of the administration's preferred policy. that could influence not only the size of the cut but also the narrative around future policy. The stakes are high. For one, this is a test of the legal boundaries of presidential authority over the Fed. Under current law, Fed governors serve long, staggered terms and cannot be removed except for cause. If Trump's attempt to remove Cook were allowed under weaker pretexts or were to succeed in higher courts, it could set the precedent, altering checks on executive power over monetary policy, something that has long been viewed as a common strand of macroeconomic stability. There are also implications. Investors value predictability. The Fed's credibility is its ability to make decisions insulated from political pressure. Matters for interest rate expectations, inflation expectations, bond yields, currency stability, and overall financial conditions. If markets believe the Fed is being shaped or pressured to align with executive demands, deeper or faster rate cuts than economic data supports, that could lead to risk in bonds rising or greater volatility in interest sensitive sectors housing. Banking consumer credit. On the other hand, some observers argue that Miran's nomination and Cook's fight could be benign in outcome, that despite the legal and political theater, the Fed will still act pragmatically, perhaps easing but not too aggressively, mindful of inflation risks and the global macro environment. The judiciary's involvement, though temporary injunctions, is seen by many as a guardrail keeping the process somewhat constrained. Looking ahead, several things will be important to watch. Whether the appeals court upholds Judge Cobb's injunction, which would allow Cook to remain for now, whether Miran's full Senate confirmation is completed in time, and how these changes might affect votes at or after this week policy meeting. Also worth observing is whether future legislation or judicial rulings arise that codify stronger protections for Fed governors, and whether similar efforts to influence the Fed occur again. In summarize, the current flashpoint at the Fed is about more than just one person being removed or one nominee being confirmed. It's about the structure and norms of the US economic governance. How insulated is the central bank from political pressure? How transparent are the legal standards? And how credible are signals about monetary policy going forward? As economists, investors, and legal watchers all realize, these questions have direct bearing on inflation, interest rates, assets prices, and economic stability.